Welcome to the Swing Trading with Cycles channel. We're going to do a review of crude oil stocks today. It's November 14th, just about 11 a.m., so live market action. We'll start with WTI Crude, so West Texas Intermediate. And we'll start with the daily chart. And this thing has been sort of in basically a range since, call it early October, right? Just kind of oscillating between just about $90. Well, call it $90.64 and $82. We're closer to the higher end of the range right now at 87, but today is just an inside day, although we have gone red. The level you want to watch for today is Friday's low. So that would be a move below $86.25. And the other kind of pattern you want to be aware of is this double top situation here, right? This was a slightly higher high, and this is potentially your daily cycle high for this daily cycle here, right? And so you would imagine this assumes at least a potential test of the $82 area. We're going to have to see, because this is essentially turning out to be a bear flag of this move down here, from this that started with this swing high, which is really just a continuation of this swing high to some degree, right? You had this move, couldn't sustain lower, tried to go higher, and this essentially becomes a false breakout potentially. So that's your daily. And then if you think about the weekly picture, so it does look like we had that ICL on week 24. So that was the week of September 26th. This is actually week 7 of the weekly cycle. And this is important to understand. This is that multiple time frame analysis. The same way we've essentially been oscillating in that range on the daily, we've obviously been doing the same thing on the weekly, because that's how it works, right? Weekly candles are just aggregations of daily candles at the end of the day. And so you can see that range here on the weekly as well. And the important level to watch is this potential new low on the weekly chart below the low of last week, which was $84.74. Right. And just in general, even if we broke down below that, we're still just kind of inside this range that was created by this big candle from the week of October 3rd. Right. And so that's very clear levels to watch for. Not exactly bullish, right? Because the other thing to kind of think about is this whole thing becomes basically a bear flag of this move lower. That's an important kind of thing to, that's just a shorthand. You can think of it, right? Like, we had this big move down, and now we've had this bounce, right? But it's a feeble bounce. We're on week 7 of the weekly cycle, and we still haven't gotten past the high that we made on week 2. That's a good way to think about it, right? We came back and basically we made a slight higher high. That's a good way of thinking about, that's like a bearish higher high, right? In the sense that it was a slight higher high, and we just kind of burned a lot of time in the weekly cycle in some sense. So that's not looking great, and it also means if we're only on week 7, and if this is a bearish weekly cycle, then some downside could be ahead. So this is going to be really interesting to watch oil, WTI, and we'll look at Brent crude really quickly. It's the same pattern. We're not going to go through it in as much detail, but you can see we have that low from that week, and now we're just kind of consolidating. Now let's go through some of the names, because that's the interesting thing. Some of them are breaking out. Either they've already made all-time highs, or they're like a whisper away. So let's look at VLO, which was one of the strongest. So I talked about the fact that we were getting kind of late in this rally, which is another way of thinking about, we're getting late in the daily cycle. Like, this could have been our daily cycle high, right? Day 23. Turned out to just be a two-day pullback that resolved in a higher high eventually. This could have been it at week 29. So at this point, we're pretty stretched. Day 29, I should say. This is a daily chart. We're now on day 35, and we're making a higher high. Now, notice we are pulling back, and you know that because, as I always say, an upper wick is a pullback on a lower time frame, and we'll zoom in to see how that actually looks, because the whole market is kind of pulling back a little bit right now. And so it'll be interesting to see. This could be what marks our daily cycle high, right? And then we move down into a daily cycle low, which you would expect us to at least break the 10-day moving average as a sort of minimum. Let's look inside this really quickly. We'll use VLO as an example. So this is important to kind of know your levels, right? So we've had an hourly candle, big hourly candle that pulled back a little bit. So even within this hourly candle, there was a pullback, right? Like you can kind of peel back the layers of the onion. But then the next hourly candle opened and we actually made a higher high, right? So this high is higher than this slightly. But now we've gone red. And so the bearish scenario here would be that we make a low below here, right? That this candle fills out red and then makes a new low, right? And so that's what you want to watch for. But in this case, there's probably even more, right? So there's more signal lower time frames, right? So on the 15-minute chart, you can see this is clearly a bull flag, right? That hourly candle is broken up into these three green candles and this one red candle, but then it just forms a bull flag. So you start to look at, okay, well, you want to stay above something like 138 and 20 cents, because if you don't, right, if you fall below this line, then you're probably breaking this structure, and you're opening yourself up to sweeping these lows down here around 132. So that's the way you start to kind of think about it. I won't go through each name in this level of detail, but you can start to zoom in to get a sense of what's happening as we start to kind of pull back here. But generally, we're seeing pretty big strength in these energy names, even while oil itself isn't looking so strong. Let's look at the quarterly chart on this guy too. Oof, that's looking nice. And I had put an alert there that triggered. I mean, look at that. We're making a new high on the quarterly chart. Like that, this is a good example, just in general, of what we want to see for other asset classes to tell us that they're making a major bottom. We're going to need to see a quarterly swing low and a new high on the quarterly chart. I just keep it simple. Now the next test will be trying to make that new all-time high, which it seems like we're well on our way. Doesn't mean we're going to blast through it. And if we look at the weekly chart, this is week 7 of a rally. So 1, 2, 3, 4, 5, 6, 7, right? After this low here. That's the way of thinking about it, right? So it's essentially week 7 of a new weekly cycle. So we could run for a little bit, right? But I will say, you would still expect higher lows. So we already had a little pullback this week. So I wouldn't be surprised to see another red week interspersed here at some point. So you want to be vigilant for that. So that is VLO. We'll also look at XLE, just the ETF. So similar kind of situation here. Pretty late in the daily cycle, making a new high. But we are pulling back. You can see that wick. It's the same concept. I won't go through it here in detail. But you can pull up a chart, look at the lower time frames. For this one, I would say the weekly chart looks much more vulnerable. Like this doesn't look like it's going to end well, right? And you can see how far above the 10-week moving average we are. So I expect at some point we're going to get a really sharp pullback here. So that might actually even be, and we did make that new high, right? We're above this level here. So that said, this could run for a little bit, right? I hear people like to just short things on strength. I think that's not smart. You can lose a lot of money that way. We have to wait for a signal. We've been seeing higher highs every week so far. Well, this week was not a higher high, close. But you want to watch a bearish signal on the daily, which we're maybe getting with this little pullback here. We'll see if it survives. And similar kind of thing on the quarterly chart. You can see we've got a new high. Just really nice stuff. XOP, really the same structure here. I won't go through that in too much detail. You can see this has a deeper sort of upper wick, which it means the pullback on the lower time frame is more violent. Yeesh. You can see it's trying to make a bearish outside hourly candle right here to go below this low here of 158. That's interesting. That's important to know about. XOM, that is Exxon. So same kind of idea here. Week 6, right? 1, 2, 3, 4, 5. Wait. 1, 2, 3, 4, 5, 6. Week 7, I should say. Also, again, just you can ride this trend. I think what you want to do is make sure you set your stops. A trailing stop is probably a good move here. You can see something like here. You'd want to hold above, call it 112, right? So $2 of downside to kind of play the upside. And obviously it depends on when one got in, etc. There is one of these is not like the other. So PSX, Phillips 66 looking good as well. Looks pretty similar. Again, this like just vertical. I mean, look at this thing. It's like a rocket. This vertical move on the weekly is going to get corrected at some point for sure. Look at all the green candles. So you want to be vigilant for that. Well, OIH is actually already going red on the week because the daily is going red. Since today is since it's Monday, the weekly candle is essentially the Monday candle. And we are about to make a new low below Friday's low for OIH. So that's important. OIH showing relative weakness. That's things like Schlumberger, which we don't have up here. Let's see. Yeah, so that's looking like a pretty big pullback on Schlumberger, Halliburton. Yeah, Halliburton has actually already made a new low. It's trying to fight back now. We'll go to Conoco Phillips. So Conoco Phillips is much further below its that swing high. So that is definitely showing relative weakness. Devon Energy, though, is the one to stay away from. I mean, look at that thing. It's definitely the weakest of the names I'm reviewing here for sure. I mean, you can see we have this swing high and then this swing high below it. So that's a lower high. And now the question is, do we challenge this swing high here? For its credit, it is still green, so that's helpful. That is something to kind of hold on to, but just not a great risk reward compared to the other names for sure if you're going to be in the energy space. And if you look at the weekly chart, right, we still have this ginormous red candle, but we have to get out of that range, right? That creates a range of 78.77 to 66.55. That's important to know about. 78.77 to 66.55. And that's obviously a huge, ginormous range, and we're kind of smack dab in the middle, which again is why there just isn't really an edge here if you're not in already. But if you are, it's good to know those levels, kind of understand where your kind of risk points are. Because if you drop below that 66.55 level, that definitely opens you up to like testing the mid 50s. So definitely be something to be aware of. And also important to note, the monthly chart is red. That's not true of many of these other names, right? You can see they're all green looking at the lower right hand. And that's a big signal right there. You can almost like set a filter for that. If something is red on the higher time frames, that's important to know about, that you're stepping in against the momentum in some sense. Marathon Oil, again, very similar look to everything else. Not anything super notable I would call out here. And finally, Chevron. Again, I mean, man, look at that weekly chart. Look at how stacked these and these are little candles. So that's important to know, because you'll get one big red bar like this that will take out all of these, right? So something like, you'll get something that looks like that, right? And it'll just take out all of these like in one shot. That's what you would expect. And I'm not saying we're going to get that like this week per se, but like at some point that momentum is going to come, and it's a question of at what level it comes from, right? Like, does it come from all the way up there, and then we kind of test these levels as support? That we're going to have to see, but you want to be vigilant for something like that. So that's the rundown of energy names. So again, oil itself doesn't look so great, which the energy names tend to kind of lead it in that sense. But, it does seem like a little bit of caution is warranted here, especially as we are also late in that daily cycle. But if you're already in, it's beautiful. Trailing stop is a perfect way to preserve profits. So that's our update. Hope you enjoyed. I'll see you on the next one.